Hey, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Today is Friday, August 31st, 2018. I'm sitting in my practice account. I'm just watching the markets today because I'm questioning what is a good volume bar. Yesterday, we talked about 1,000. Uh, I believe it was 1,000 red to start the day, and then it went 1,000 blue, and then we saw 1,500 something blue yesterday, and then you saw the sell-off at the end of the session. Just, well, a little bit of a drawback that or a retracement off of the 70-50 mark. If you looked at that closed 30 video I put together yesterday. What I have listed on this chart is the since I'm sitting in kind of research mode, I'm looking at what I like blue 1000 bars. So I'm not a huge fan of red 1000, so I'm going to stay away from those. So I'm writing in my notes, stay away from red 1000 bars. What do I mean by a 1000 bar? I call them RBVH HVB or BBVHVB, and what it stands for in my terminology is blue bar. I can't even. Should have had speech therapy when I was younger. Blue bar volume, high volume bar. So sometimes you'll see I take a screen print on my. I'm actually due for a web post onto 123 Day Trade. Maybe I'll use today's area and in this video, and I'll put it up today, since I talked about wild fishing as well a little bit into my the insanity that is my life, right? As some people would like to tell me. We all have our quirks, right? And if you don't, well, then you're a liar, as far as I'm concerned. So, so the short area was the short at 70.13 today. Now, obviously, this is all in hindsight. In hindsight, you're always a winner, but hey, this is a valid setup as far as I'm concerned on the charts. So 1P was 6998, and then 2. When you're in research mode, this is what I do. I mean, and I'm sitting in research mode. I want to just be calm and efficient and able to look at it with hopefully a bird's eye viewpoint. Now, this here was a short, and let's go ahead and mark this high volume bar. That bar that you're looking at, that I'm getting ready to draw an arrow to, wrong way, is the highest volume bar in the trading session. And I like to call them BBV, HVB, or if it's red, RBV, HVB. So the blue has a tendency, and I'm not saying that it always works this way. I just use the key word. The operative word that I just use is tendency. The blue has a tendency to sell off, and the red has a tendency to go up. So when its highest volume bar, it goes in the reverse direction of the market. So in other words, it can be a turning point in the market. Doesn't mean it will turn and go to hell and back. It just means it's a turning point until, most likely, over here on the right edge, there's a higher red bar volume than this blue, or there's a culmination of bars that outweigh this bar, where basically what you see is traders clearing out this side of the trade and taking profits over here on that red side. Hopefully that makes a little bit of sense when you're thinking about it, especially as it relates to crude oil market. So that's, if you said in a nutshell what I like to do, this is one of my all-time favorite trade setups. And you see the blue line, it's pivot, but you know what? We've already been through pivot. So if you've been through pivot, you can trade through it. If it's the first time through pivot, then you really don't want to play with it, because you can look back here and you can see we've already been at pivot earlier, and we went up and then we've come back down. But if we go, well, actually, let's go ahead and screen print this, get that off. And if we go back, you can see that we've been at pivot several different times. And in fact, when you're looking at it, the first time we went down early, right? Went down early. We went up through pivot, back down through pivot, back down, up, down, up, down, up, down, down again, up again, and down again. So once you have established that pivot is already been breached, and especially as it relates to today, I mean, just briefly speaking, it looked like it got hit 5-6 times. Now it comes down to how much profit can you get on the trade, how much, where to put the stop, where to, when you go a 2p move, this is the biggest area that I have issues with. Low volatility, I'm almost to the extent that a 2p move and low volatility should be an exit point. So in other words, with one contract trading in low volatility, meaning low volatility, what I'm talking about, like I was talking about in the other video, low volatility to me means that we're below 2.0. So we're at 1.23 on the volatility measurement. In other words, average range of movement is 13 ticks right now. So if average range of movement is 13 ticks, 2 times that, well, this is a measurement plus 12.25%, but 2 times the 13 ticks, or 12.3, rounds up to 25 ticks. So this is just pure risk, pure movement. So a pure movement without the profit objectives. Today, when I look at a 12-hour move, would be 147 ticks. That would be extreme movement today. In other words, the crude oil market on extreme movement with current market conditions, with the current ADR, has a possibility that it can move 1.47. The magic numbers that I talk about means that, hey, the market could possibly go 68.79 to 71.34. This is basically an extreme type of movement day that you're hunting for. What does it work best in? It works best when volatility is higher. When volatility is not as high, like today, you're watching the market just went right back through that $70 a barrel again. And it's going right to pivot. So a day like today, honestly, what I would have done on this trade, I would have made sure to grab at least, at minimum, a 1p profit target. I would have made sure that I'm going to get paid on a Friday. So a Friday, went to 2p. I would have made sure to get paid on a Friday. That's Friday's payday, right? For a lot of us in America that work. But you want to think of Friday as a payday. Maximum movement a lot of Fridays is 2 to 3p before a reversal. Now this once again doesn't mean that we won't go further down, but the only way that I know how to trade this kind of environment with the 2 contracts is a tortoise and the hare strategy that I would use. Now for me personally, I would look back to here over this blue line, and I would probably be 5 ticks higher than this bar right here, but that would only be on the trailing part of the contract that I would have. So it was at 70.09 plus 5 would be around 13.14. So right now, and anything that I had left, I'd be sitting at break even on this trade with any contracts. Now if I was trading 2, one off, definitely here, hopefully I would be smart enough to take it off here. A 2p move on 2 contracts makes up for a lot of bad trades that you've done. 3p is better, but 2p works. And then the trailer is where you have the little bit of the discretion side of the trade to be able to trade the way that I like to trade. I like to move and roll with the punches a little bit like a rope-a-dope, and especially on the short side, because I know the market has a tendency, as long as it stays intact, the market has a tendency to make, what's that called right there, lower highs, right? In a downward movement, you make lower highs. So lower high, lower high, lower high. And if this stays intact, then the downside of the movement is stronger than the upside of the movement. And it's all based upon this volume over here until you see some reds over here on the right edge that stop the downward movement. And then doesn't mean it won't break through. It just means warning, warning, Will Robinson. Warning, right? Warning. Watch out. Things and market conditions are changing. So I hope this helps you a little bit. What I'm going back and I'm debating about, if I would run with a tortoise in the hare type of trading strategy, that means that I've got to be willing, like today with low volatility, I have to be willing to risk. That would be minus 13 by 2. So I would have to risk 26 ticks to make, in this case, that was 30 down here. So one contract off at 30 and risking 26. So it still works. So in other words, I've got to, if whatever your risk is on this side, so 13 by 2 is today, 26, you got to be, minimally speaking, you got to be able to get on one contract more than what you're willing to risk. That still is the overriding theme. Preferably you want to be higher than like a 2p move, but right now it's sufficient. The question is, if you're trading 2 contracts and you only get this, and then other times you're getting, maybe you're getting one off at 13 and you're trailing the other one, and the other one gets, so you might end up, instead of minus 8, minus 26, you end at like minus 17 or something. And then if you have minus 17 on one and then plus 30 on the other, all of a sudden you're in a positive expectancy if your trading strategy is good. So what am I talking about right now? You've got to be able, as a trader, there's 3 rules to trading, right? There's basically, we all know them. We all know the 3 rules. At least you should know them. The first rule, cut, losses short, right? So have an exit point. Have an exit strategy, and you need to have that exit strategy before you even place the trade. 2, the second thing, let profits run, right? So let profits run, and that's also part of the strategy itself. That's part of your strategy. Now, if you're looking at the 3 things that you're looking at, the cut losses short, that goes under risk management. The let profits run goes under trade management. And taking profits on the ride goes under money management. That should be an M. Goes under money management. Now the 4th component that you have to watch out for is psychology. What is your psyche today? How are you mentally? In other words, are you good? Are you bad? Are you indifferent? How is your psyche? Are you stressed? If you're stressed and then trying to trade, usually not a good idea. Alright, so I hope in some small way this helps. I'm going to cut this video here on a Friday. The big main talking point that I've got right now, as it relates to TST and the 30K, is can you effectively and efficiently trade 2 contracts? And if you can, how in the 30K? I mean, you really don't have a lot of room to trade any more than a series of 2 in low volatility, and that would put you, if you would, like today, losing 26 ticks a pop on 2, put you above that 50 mark, right? You're at 52. You can't do that. You can't take 13 by 2, because if you go above 50 ticks, the 50 tick combine, if you go above that, you hit max daily loss and you get basically the big F. So that's why I don't believe that trading 2 contracts is effective in the 30K combine. The problem is with the 50K combine, once again, with the 50K combine, you have another barrier. You have the 1,000 weekly loss. It sounds, oh well, I can lose 1,000, blah blah blah, but you have a 1,000 weekly loss. So on day 1, if you lose 800, you only have 200 available before you get shut down in that week. So effectively, the 50K is worse, in my humble opinion, than the 30K. Because at least on the 30K, you know that you can keep trading and you could lose 1,500 in a week pretty much, right? So you could effectively lose $500 more in the 30K than you can in the 50K in a week. So you have more room, basically, long story short, to get yourself out of a bad situation. That's why I still firmly believe that the 30K is still the most efficient way of getting through and back to funded. And obviously spending as least amount of money as you can with Top Step Trader is the most efficient way for most of us that have a budget. My budget, for those that don't know, is around $500 a month. That's all I'm willing to spend at Top Step Trader. And you go, well, 500 times 12, why don't you open up your own futures account? Because the days that I would lose, I know for a fact, the days that I would lose 1,000 plus because of my stupidity. I'm more effective and more efficient in this environment where it's a little bit on the safer side. So I have basically, what do I have at Top Step Trader? What's the biggest advantage that you have at Top Step Trader? Your biggest advantage that you have, so your biggest advantage that you have at Top Step Trader is a fixed cost, if I would put it into accounting terms. You do not have a variable cost, which would be a futures account, right? Your variable cost is how much are you willing to lose in your futures account. Our fixed cost at Top Step Trader is, in this case, 150 plus a reset, maybe 2 resets. That puts you at 350, and if you're really having a bad month, 150 plus 3 resets, that's 250, 350, 450. So 3 resets and your $150 fee, you're still at $450. I would argue that $450 is less as an educational thing than one day losing 1K of real money. That's my talk for the day. For those that are listening, thank you. For those that think I'm nuts, thank you. For those that enjoy it, thank you. For those that just love to see me blow up, thank you. Thank you to everybody. God bless you all. Yeah, I know. I'm a quagmire, and I sometimes I'm the way I look at myself a lot of times, I'm doing the best I can to maintain my sanity as a Christian. And Christianity, because since I believe in God, and I'm not saying that my way is the right way, I don't for the most part, don't bring religion, politics, and all that bullshit into this environment. But for me personally, having a higher power or someone greater than me helps me sleep at night. So there's only so much that I can do, and the older I get, I understand one word more than any other: control. What can you really control in life? What can you control in life? In trading, pretty much the only thing that you can control in trading is where you're going to enter the market and where you're going to exit the market. That's pretty much all you can control. Everything else in trading is at the mercy of what the market's going to do. All right, that's it. Dave Knight, take care. God bless. See you on the next video I put together. Bye for now.